Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your agriculture update for this Monday, the 15th of October, 2018, and we're around 2:25 in the afternoon. Beans, look at this dramatic move, 24 cents to the upside. You know, this market we've been talking about has the harvest low been seen, and it's certainly looking across the whole grain complex, if that is in fact the case. We had a little higher interest rates today, a pretty stable day if you'll take a look at the energy prices and the stock markets. Not too different. The NASDAQ's getting hit, but the other markets are basically a bit higher. So as we take a look at the weekly area chart of closes, you can see how the market last week got itself up and over, actually about 2 weeks ago, up and over the 18-week average, slipped back, and this is an area chart of closes, and the market came right back. When we go to a daily chart, I want to remove today's action if I could. You were going sideways for a bit here, and the question was, what next? And as you could see, the market lifted away to the upside, sort of confirming now that 810.5, 811.5 zone in the no of beans was probably the harvest lows as we look back. When you look at a trend, you still don't have one. What you have is a pattern of a lower low and a higher high. I think you can see that right through there. When I step back and I look at the key moving averages here, you're over the 18-day moving average. You've got a market that rallied today to the upper Bollinger Band, the 100-day average of closes, and ran into resistance at those two numbers. Will it be able to go a lot further? Well, let's see what the momentum is. The momentum in the market is overbought. So you have slow stochastics lifting up. Any readings over 80 I consider overbought. You've got that. And you're into the resistance zone. Wouldn't be surprised if we get a little bit of a Tuesday reversal. On the December soy meal, the market's got a big outside day up today and sliced right through and closed over the upper Bollinger Band that it has not done in a while. One of the things I was telling you is this sideways action is exciting because from sideways action often come trends. Does this mean the market is now in an uptrend? Well, as a market technician, yes. You came out of this. If you take out today's low, I'd call that a bear trap, and that could be a trap where you drop down again to the bottom of the Bollinger Band. That's always a possibility. If you extend the gain, the 100-day average resistance is right above the market, and you always pay attention to where Bollinger Bands are, and in this particular case, the market is over them. Keep in the back of your mind to break out of sideways action, you're going to get overbought or oversold to get something going. This was sideways action, and as you could see, the market fell pretty hard there, and it had to get first oversold. That's my point. In soybean oil, the market is back up, and I consider any reading over 70 is overbought. So I have an overbought market. I have a reading of 71. I have a market that's now got a higher high, lower low. This whole break just resulted in prices falling back to that line in the sand, that 18-day average of closes. That's what I define it. When the market is up and away from it, the first break to it or the first rally to it is often an area the market fights a battle. And if you look here, you came up, came back down, checked it out how many days, and then eventually moved higher. That's the point I'm making. When we broke down, we went to it through these days, and then it lifted up again. And now that you're over the 100-day average, you've been there before, it's not the first time over it, will that put the upper Bollinger Band into play? In the corn market, you're at the 100-day average in the upper Bollinger Band. We have not done this in a long time. This whole action is still friendly. If you take a look at the slow stochastic readings, they're over 90 today. They were over 80s, both numbers, on Friday, and they were not on Thursday. Therefore, tomorrow's an important day. You are very overbought. The odds do not favor often In fact, the odds, the way to say it is the odds don't favor getting embedded readings. You often get to that point and you turn away and you'll see that. But when they embed, it's a statement that the trend has changed into something else. That's what I pay attention to. Doesn't mean it has to hold, but that's what it tells me. In the wheat market, like the corn, I've got this sideways action, and now is the market coming up to try something. Today's rally carried over a previous rally high. Break lows have lower lows. Will we fight at the upper Bollinger Band? If you can beat it, can you get to the 100-day average, or do you fall back to that line in the sand is the question. In the sugar market, you have an embedded reading, and you've had it. And once you get those, as I just said, to me, it's a conversion from an overbought to locking in a trend, and that's what it's done, and you could see the rise that this market's still having. Until that red line gets under 80, I still view the market as having upside potential. The same can be said for coffee. And the interesting thing in coffee is, will this market see a setback? Look at how powerful these soft commodities have gotten. Cocoa included. It did have an outside day down today. And like we so often say, let's get rid of today. If you pull back, that 18-day moving average may offer the support. And that's what it did. We still have a market with higher lows, higher highs. I would say if you take out today's high, watch out. That could be a bear trap. And the reason it's bear is you got a higher high, lower low with the lower close. If that occurs, will the market make a run? As it often, not always does, to the next resistance point, which could be the upper Bollinger Band. In the cotton market, momentum up, trend up, higher highs, higher lows, bias up. Will the market make a run to the upper Bollinger Band or find support on a pullback to 77.40s? That's what we'll be looking at. Then we get to the cattle market, and cattle came up pretty good today. For those of you that were watching the market, if we come back to Friday, on Friday we had an outside day down. If you take out the high of an outside day down, one of the things I like to teach is that the market often goes back to one of the key moving averages. In this case, here's the 18. Because the 100's under the market, it can't be the 100, so the 18 could be the target if that was taken out, and that's what the market did there. We did not do that in the feeder cattle. Feeder cattle just came down, but it held the lower Bollinger Band. It's trying to bounce away from there. And in the hog market, back up to the 18-day average of closes, a higher close today. More problems, by the way. China announced on a farm in one of their provinces that had 20,000 hogs. It's a corporate-owned farm. That's a big amount, and they got the swine flu disease there. So that's very important. But the resistance at the 57.02 level, it held at this point in time. We'll see if the market can do anything. Momentum is turning up, which is always a worrisome sign in these things as you keep challenging the resistance. The seasonals are often up too. If you follow the ag markets, like you just heard me talking about, one of the things our firm does is we write a lot about it. And it starts really all weekend. We keep going through the weekend. By the time the Sunday night markets are opening, you already have a lot of information on these soft and the grain markets that you can use, at least to understand ideas as to what's going on. We include weather, all the different studies you need, special reports. This is what our clientele get. If you'd like to see a free trial of what our clients get, and these are our clients that are trading through us and the like, we'll be happy to show it to you. You won't be able to stay on it unless you become a client of ours. Give us a call, go to our website. You can also click up here, and that'll take you right to your sign-up page. I'm Ira Epstein. You have a good day, and I'll talk to you all tomorrow.